Good afternoon, Scott Redler, T3 Live. Well, interesting day here on Wall Street. Everyone's scratching their heads. Oh my goodness, I didn't see this coming. What's going on here? You know, PS, Operation Twist was nothing. Here gone, there it goes. Whatever it is, okay? What I pay attention to again is the price action of the stocks. Yesterday we had a push through failure. Okay, we traded through the highs, came back below, sell signal, technically. We've had a lot of macro reasons to sell. We've had a lot of fundamental reasons why the market should go lower. I look for technical reasons, and yesterday was one of those technical reasons. Distribution day, a lot of the leading stocks all pushed through and failed, which told me to lighten up. And then you also had your group that we haven't been really focusing on that was showing extreme weakness. Almost like there's been a tale of two markets where we haven't even paid attention to the banks, the oil sector, the copper, metals, this and that, and they were gross. And I tried to point out this morning in the trenches and said, you know what? Besides these 15 really good acting stocks I've been doing very well with, there are groups that are really weak, groups that are important for the overall economy that could lead us lower. The banks, the OAHs, some of the other metals, not gold, not the inflationary metals, but like copper, FCX, coals, etc. And today, they all started weak, and they had really nice follow through to the downside. You also had that upper level in the S&P we talked about, 1188, 1192, a line of defense. If you didn't sell yesterday, that was an area to stop out of some of your momentum longs, your loose longs, whatever it is that you were holding that you didn't want to be committed to, and get out of the way. And today was a pretty ugly day, and I know it was Fed day, and sometimes you get a bit of a reversal tomorrow. But I'm not putting my cards in that basket or my apples in that basket or whatever it is you want to put in that basket, stocks, whatever it is. I'd rather have cash in that basket, and that's what most of my community is holding on to starting from yesterday. If you look at the chart of the S&P, this is what I'm talking about. And take a look. This was that 1188 to 1192 area, to hold on to for momentum. You take a closer look here. This is what it had to hold in order to keep the constructive nature in gear for a potential move higher. You know what? It broke to the downside, and now look where we are. Oh my goodness, right back to the lower end of the range. Now the question is, do we break it? Can you short it? A lot of guys got short today. Some are holding it overnight. That's the way to go. That's what the good book says. I'm flat. I'll play it by ear. I don't need to have that headache. Tonight's my birthday. I'll stay out of the way. I don't need to think about it. Anyway, this is the next area. You look down here. This is 1157, and then 1140, 1135. As far as the weak sectors, because that's what I want to show you, that's where the action was to make more money. If you come back here, you'll notice, or you remember, think, what did Red Dog say is weaker? XLF, banks, not news. You didn't hear that here. You hear that everywhere. But meanwhile, those bank stocks broke lower. OAHs, Halliburton, NOV, Schlumberger, all broke lower. FCX, New Year lows. This is relative weakness. This is why you stay away from these areas. And when the market turns lower, same way when a market is holding up well, or stocks are holding up well when we go up, relative strength is great for longs. Relative weakness is also good for shorts. Look at these OAHs. Look at this lower wedge that just broke to the downside. Here you go. Pow! Lower wedge, closing on the lowest end of the range while the market was on the upper end of the range. Relative weakness. There you go. Right now back to the lows. This is pretty ugly, guys. This is dangerous. And this, to me, tells me these OAHs could go down to about 110. Look at Halliburton. Broke lower. This was the line that I drew this morning. A lot of guys got short here. Congratulations, you made money. This was your area if you were long this thing. This is why we trust support levels, right? This is where it broke. It broke below, came a little bit above. Big move down, retest. Now look at this. This is really, really ugly. Schlumberger, same thing. Look how, my goodness, look at this thing. Really, really ugly. I drew this morning. This was that lower descending channel, broke to the downside, was at the bottom end of the range while the market was on the upper end. This was not healthy. This was not good. And this was a great shorting opportunity, or hopefully you're just not long it. No reason to be long this. Below every moving average. Not one rule in my book tells me to be long this thing. Same thing I've been talking about Caterpillar and Deere. Look at this Caterpillar. I know everyone loves it. I'm sorry. People have it in their model portfolios. I've been trying to talk about it positively. And, You just can't, there's nothing positive to say here. Below all moving averages, breaking below this lower end of the wedge, this easily could see, 75 or so. If you're trapped there, at this time it's hard to sell. Your real macro sell was when it broke this upper level support, okay? And, it's maneuvering this lower end of the range. Couldn't even get back to the upper end when the S&P did, and now look at it. Bad shape right there. FCX, we talked about that also on, off the chart, showed you it. Look at the follow through to the downside here. It just goes to show you that, old names, it doesn't matter if it was an old name and it was a good name in the past. This couldn't rally below all the moving averages, and pow. I guess we'll look at to see, what levels hold moving forward. Not the time to short this second, but definitely not a place to be long, a place to be running for cover if I were you. And then we talked about the banks. The banks have been a trouble spot. The banks have been a spot we've been making cute little longs, but today I'm like, if Goldman Sachs breaks below 100, psychologically not good for the market. XLF starts breaking below 1240 or 12, it's in trouble. Morgan Stanley made new lows in the year. JP Morgan is not too far behind. Dangerous type of stuff. Look here at the XLF. Showed you this chart pattern this morning. Wow, this is dangerous, guys. This didn't even give you a reason to be long, and then I drew this little inner wedge to have you cheat a little bit, that if we broke below 1245 means bad news, and we close below 1190. We should get some follow through to the downside. Goldman Sachs also. A lot of guys shorted in the community. If that was you, congratulations. I tried, didn't hold on. It was my birthday, went out for a little bit of a steak sandwich for lunch or whatever. Closed at 97.86, so I missed my opportunity, but for you, you use it as a gauge. There you go. Morgan Stanley, these guys did not time this so well, huh? They're insider buys up here, around 20. This is why you can't, take it fully for, I guess, for what it's worth. Not a good buy. Little wedge. And now look at this. This is really bad, guys. It broke below this area. No strength here. I don't know. I guess I drew a long-term chart here, so let me see if this area means something. But all I know is it broke below this lower pivot. Guys made money short. If that was you, congratulations. At this point, I would just not be long or short. Just leave it alone and look at it, for psychological factors. This is a big area on the weekly. If it doesn't hold here, guys, you're talking $10 on Morgan Stanley. That is dangerous. JP Morgan also looked like it was trying to get through those lows. It actually did. From here, what is this? This is like 27. That's dangerous. Okay, this was a level I drew. Another one. And now if you go back to the daily, it broke, and it broke hard. But it didn't even give you any clues that it was looking to rally. It's below every moving average here. That's why I say, when everyone's trying to make excuses why to be long or looking at setups, especially during a correction, I look at to see whether there's accumulation, whether it's above moving averages, not below, whether it's at upper ends of the ranges, not hanging, ready for a cliff fall. So, there are ways to maneuver the markets where, you're not in jeopardy of getting hurt, where you actually could use it to your advantage. And right now, recently or the last week, we've talked about OAH is weak, FCX weak, financials weak. Yes, there's been a group of strong stocks, but those strong stocks we sold yesterday. Well, we sold a lot of them yesterday saying, you know what, can't hang our hat on these 14 stocks right now, considering that we had a push-through failure and we might be in jeopardy of further downside. And if you look at Apple right now, Apple looks like you had a double tail here. I tried being short today, made a little bit of money, but, two tails up here shows me that we could get that retest to buy back around 404, maybe even a little bit lower. Amazon tried to be, strong today for most of the day, and it also couldn't hold up, caved in, coming below this area. We'll see how it holds this, and then perhaps this. LVS also strong, tried to be strong again today. All of these things tried to go up and tried to do what investors are used to buying them, but in a weak environment, even these can't hold up. That's why we sell some on an outside day, and we say we'll look to figure out if we could buy back. So now we'll see if we can. Same thing with MGM, sold it yesterday into that tail, coming back below this trend line. Could see some lower prices. Baidu also. A lot of guys said I'm going to short the up open. It took a little time, and this broken wedge tells me trouble. So it's broken, it's in a void. Netflix, I know, was a bit frustrating today. As I lost some money trying to be long there, tried to hold up. It's been so battered and bruised. Maybe we'll try a little bit again tomorrow. It showed some relative strength. The CFO spoke, tried to calm everyone down. At this point, just don't get so infatuated with that trade. I know the stock came from 300 down to 127. I know a lot of guys made a lot of money short. Some started buying a few days ago and have been in pain, feel like they've lost money, so they feel like the stock owes them. But again, when these stocks are broken, they don't bounce back so quick, and we saw that today. So with that said, still look at it, still try and do a red dog reversal 80-20, still try and be calculated. Just don't be too infatuated with it, because if you do that, you're going to get hurt. If you look at the TLTs today, they just took off. Big move in these TLTs. Okay, broke above this 115 area, nice clean trade. Gold did not rally with the market weakness. I don't know what exactly that's saying, but for me, I'm flattered right now, and I'm going to figure it out. If we start to break below this 172 in the GLDs, you could see another move lower to the 50-day and perhaps this support. If it tries to reverse, at least we have an inside range to trade against. But right now, there's no edge right here. The market's trying to figure a lot out right now. You have a lot of macroeconomic headwinds out of Europe, out of the U.S., and there's just a lot of unknowns and a lot of uncertainty. So when that's the case, you try and take yourself out of harm's way. And I don't care if the bank's not giving you any interest rate or if you can't find yield in places. You know what? Just keep your money safe. Keep it protected. And if things start getting choppy or in harm's way like we saw starting yesterday, that's when you can go to cash. I don't care. Hold cash. Don't look for the Swiss franc, the euro dollar, this, that. You know what? You don't understand that. I don't even understand that. I'm not that smart. So if that's the case, just make sure you're comfortable. And right now I feel a bit more comfortable being in cash, being flexible. For the last week and a half, we tried holding multiple positions in order to make money from a market move. But when it's not the case, then just lighten up. There's no reason to be in harm's way when there's pressure around the world everywhere. I'd rather see you take a step back and be in a position to embrace volatility, because that's how we make money. Tomorrow's Thursday. We'll see what the market has in store for us. And at this particular point, I think I got a lot of emails saying thank you for having them go to cash yesterday by being a little bit skeptical today. And even guys made money shorting those weak sectors, because you can make money short the market. You don't always have to be long, and you don't always have to park your money in a sector. You could be in cash, and I don't care if it's underneath the blanket. Keep it there. You deserve it. You work hard for it. The market's here to make you money, not here to hurt you, and hopefully will help you, guide you in the right direction. Scott Redler, T3 Live, the recap. See you tomorrow morning. Have a good night.